Hey, good afternoon, guys. This is Eric with Inspired Trading. Hope you guys are having a wonderful day. I know there's a lot of things going on in the world. Please stay safe. Just know justice is important. And we hope that, especially for African Americans, that we can finally be heard, throughout the years. But more importantly, as African Americans, or for anybody watching this video, more than likely, if you're watching this video, you're not one of the major players in this world, in this economic, monetary system that we're operating in. So therefore, I think it's very, very, very important for you to understand cycles, understand how this thing works. All right. We're being distracted. That means something is brewing on the back end. All right. So with that being said, make sure you keep your eye on the prize. All right. So we're looking at Bitcoin. So I want to go over Bitcoin. We got some key levels with Bitcoin that it did not break. So we had the 10,480 or the 10,500, whatever range. We didn't break that for the month of May. Candles closed below this level. Therefore, I'm not saying that this is trouble, but we needed price to come up above here, maybe retest this area, for us to push higher. However, we closed below this level. So what does that mean? That means that we have to keep this level, all of this in play. And you may say, Eric, that it's not going to happen. No. So what you guys don't understand is this. This is a currency. This is not a stock. It has characteristics as a stock to a certain extent. It has characteristics as a commodity, such as gold or precious metals. And of course, in Forex, it has the characteristics of a traditional currency. So therefore, you have to respect these levels of movements, because I can go through any chart on a Forex pair and I can show you these moves. What you're looking at is you're in a channel. This is a channel. We have not broken this channel. And therefore, since we did not break this channel, we have what? Room to go to the downside. All right. So with that being said, you have to respect that particular level. Now, if you're a long-term trader or investor, I'm trying to get out of this. Oh, all right. You would know that, there we go. You would know that you're probably not concerned with this particular move because you're just a holder. All right. However, if you're new and you're just now getting into the cryptocurrencies, you should understand some of these levels. Okay. You should understand these channels. It's because I don't want you running in, right? See, look, right up here, somebody bought it 10,436. All right. Now they're already down to 9,527. For a newbie, that they don't like that. I mean, you're down. That's not a lot, but you're down. You're seeing your account in red. You was just green, and now you feel like, hey, why is it that I came to the party, and then also when I come here, everything else starts going down? Welcome. I'm outside, so you probably hear the helicopters. I'm in Atlanta, so y'all know what's all going down and up in this area. All right, so all that really doesn't matter because you're a long-term holder. I mean, you're gonna get the swings. You're gonna get it. It is what it is. The unique thing about Bitcoin is that it's like a hybrid. It's a hybrid between almost like a stock, a forex pair, and a commodity. It's like it's its own unique asset class. All right, it has all those features are clumped up into one. Okay, so with that being said, you're gonna get a lot of the different swings and movement in the market based on all three of those. Okay, so that's what happens. I mean, how often do you see a stock go from from here over a I mean, what percentage drop was this? 62%. How often do you see a stock, a blue chip stock? When a blue chip stock, your Apples, your Amazons, your Googles drop 65% and then rally and recover it all within what is March 12th to basically June 1st. I don't know, 45 days or so, a month and a half. It's like almost unheard of, right? But here we go with Bitcoin. This is exactly what you got. It's because you're dealing with something that's unique. And once you learn how to trade it, you will see it. Me personally, I don't trade crypto. I invest in it. So I hold it. So I don't really care about all this. Only time I care about the technical analysis on any of these is for my entries. All right. I have certain areas where I'm entering at. Like for instance, I would have entered here based on my trade rules. When price was coming back up to reach this spot, I'm buying. All right. So this is my buy zone. You may ask, where's the next buy zone for me? As of right now, nothing else. However, if it do break this level, I would consider getting back in buying. It breaks this level, coming back down, I will look for buying opportunities, not only just in Bitcoin, but in other altcoins. As you know, altcoins follow Bitcoin's price. All right. If Bitcoin is up, more than likely your altcoins are going to be up. And they normally typically move a lot heavier than Bitcoin would. So that's another thing. And if Bitcoin starts to drop, then your altcoins are going to pull off too. We're not in an established market yet to where altcoins can take their own trajectory. They basically follow. For instance, imagine if the whole entire market followed the U.S. dollar and forex. That would that's not fluid enough. That's not good. Then that means is that if the U.S. dollar is doing good, then all the other currencies got to do good. If U.S. dollar is doing bad, then all the other currencies do bad. No, eventually they're gonna have to break off. The cryptocurrencies eventually is gonna break off to their own little entities. They don't care if Bitcoin drops down to, I don't know, 5,000. You can have a little altcoin that could be growing 220%, whatever, keep going on up. That's gonna eventually start to happen as we get more stabilized in the market. But for now, Bitcoin is the tone setter. It's almost equivalent as being the index for the whole entire industry. So whatever it does, that's what everyone else is going to be doing at the time. All right. So right now, are we buying anything in Bitcoin? No, there's nothing to buy right now. Only reason why is because it doesn't meet any of the buying metrics of right now. All right. For one, we are a trend. We got a trend that's holding us great support. So we got this trend right here. All right. Boom. We did not close above this. A trader who is a day trader that know what they're doing, they have bought this and they're up. Okay. So this position, they bought into a position, depends on their lot size of what they're doing, or if they're in the futures market. I don't know what they're particular trading, but you see clearly came down to the trend line. Let's move it up. Boom. Trend line, buy. Boom. Here, buy. All right. What are we looking for? We're looking for that we possibly could come up and we can retest this area. This is critical. We have to break it. If we break it, we need to close above. We need to close above. Why is it important? It's because we need this area right here to be support. Right now it's resistance. If we do not get above you for look, so in order for people who want Bitcoin to go to 25,000, 35, 100,000, that does not exist until you get through this level. It's levels to everything in life. You don't get through this level, what are we talking about? There's nothing to talk about until you get through this level and you find a strong support. That's it. You go down here to the bottom. This level of 3,800, it held as support. If we would have broke this and closed below this, that's trouble. We're going more down to the downside. Here's the problem. Look at this. This is resistance. If we break below this, this is what you're going to be looking at. You're going to be looking at the possibility of going down, maybe retest this area, and then just it's a descent. You're probably like, that, Eric, that's not going to happen. Yes, we're in a channel. If we didn't break above this, we're still in this channel. For all we care, we could bounce and consolidate all through here for another year or two if it wanted to. You have to respect the fact that it can do that. You don't ever come into this trading thinking that that it can never happen. You have to respect the technicals that it can happen. Because looking over here, this was not supposed to happen. Coronavirus was not supposed to do this. It was not supposed to do this for crypto, right? Everybody thought that if everything went bad in the equities market, that everybody should be flooded into the crypto market. All right. When you think of the US dollar, when it gets weaker, you think gold gets stronger. Okay. Well, that's what people are looking at crypto for. If the economies are getting bad, and we need crypto to flourish. All right. But here's what I want you to think about. The S&P 500 is moving up strong, and I'm looking at the technicals on that. It looks like it's going to go up to the 78% retracement level over there in the equities market. Well, if the S&P is going up, traditionally the S&P is going up, crypto really doesn't go up like that. It starts to reverse. They're almost like an inverse. So a lot of times they don't go up simultaneously in the same type of strength. They offset each other. So if they're offsetting each other, if we're going up in S&P, possibly crypto could start seeing a nice little pullback from here. But this is a key level right here that we need to break. This is 9,123. If we break support here, we got to consider all this in this area. We really do. Okay. So this is a waiting game. This is a patience game. Personally, if it breaks this, I'm looking to tether up all my positions because I believe that I can now get down here and get some discounted prices on a lot of altcoins that I'm holding. So if that happens, that's my trade plan. This is not advice. This is not financial advice. It's not investment advice. This is just my opinion. All right. If we break this trend line to the downside, I'm tethering up. If you don't know what tethering up means, I'm putting my coins into a stable coin. I'm going to the stable coin, and I'm gonna put thousands and thousands and thousands of dollars into stable coin. As it drops, I will go and release my thousands and thousands of dollars that's in my stable coins back into the market to scoop up at a cheaper price. So therefore, I will secure more coins at a cheaper rate using more capital that was equity. All right. So all this buying up in here and all up here, I have a lot of equity. All right. Secure the equity by put it into a stable coin. All right. As soon as you lock into a stable coin, then when price drops, you unleash your funds from the stable coin to buy back what you initially had the first time. But then now you can buy more. All right. Versus the person who leaves their money in here. If you leave your money here and it drops, what you will have to do now is you either got to commit new capital to buy down here at these prices. New capital means you just buy from your traditional Coinbase or whatever you do. You have to come in and you have to buy using new money. Instead, if you lock in equity, you can use what they call recycled money. All right, that's money that's already been made in the market, and you're using it to double back down and buy even more. All right, so this is where we at with Bitcoin. Just the level we gotta break. Okay, this green box up here is my upside targets. All right, this is the long run. All right, this is 25,000 area. All right, as you can see, we got a long way to go to get there, but this is my level. Now, look at this. Look at this channel. All right, this is let's go back. Let's go back right here. This is January. This is June 24th, June 25th, 2019. We had we broke out of, see this channel? We broke out. All right, and then look, we closed above. Okay, we all thought right here, this is it, y'all. Look, we don't went up to 13,000. Hey, we're going to the moon, and then all of a sudden it peaked down. This is a dangerous sign when you have this. I want to show you something, and I'm not gonna always be right, but I bet on myself. This is a dangerous sign. You see that? That's a wick. Look at that wick. A wick. I remember I told you guys, wicks leave clues, right? But if they don't tell the story, the body of the candle tell the story. The clue is, look, we come down here. I'm not ready to stay here right now. That's what it's telling you. It's telling you the story. Look, the story is, look, I'm gonna come down. I'm coming down here, but I'm not here to stay. But I will be back. And what? Price came and pushed up here, and then what? We broke back down, and guess what it did? You see what price? Price came down to what? Cover that wick. Look at the video what I'm talking about, covering the wicks. All right, wick was covered. We here. We broke back below here. All right, and then we're not staying. There's no stay. It's not a lot of right here. There's like a lot of days of staying, and then we dip. This is not convincing. We failed. Some people call this a false breakout. We broke out. We didn't hold. So think about it. You had massive numbers of people who are going what? Long. See, guys, we're playing a different game now. The futures market, the derivatives markets is in play now. If you don't know what a derivative market is, go look it up and study it. But that basically, people out there are trading Bitcoin without owning it, which means they're trading a derivative. It derives, the value derives for something else, but they don't actually own it. All right, I can go on the futures market. I can even go on the Forex market. I could trade Bitcoin without owning it. And so can you. So if you know that you can make money on something going down and you can make money on something going up, what makes you think that the market is going to be just in your favor? That it's just going to go just in your favor? No, you got multiple parties at the table. Somebody got to eat. Somebody got to feed the bears. Somebody got to feed the bulls. But how do you feed the bulls? By having a lot of people becoming bears. So if a lot of people is becoming bears, that means that a lot of people is banking on what? The stock or the equities or whatever you're trading to go low. But if you got enough people thinking it's going to go low, what did the market makers do? They take it up. Why? It's because you could collect premium on their stop losses. When you're in the futures market, you're gonna use stop losses, because if you don't use stop losses, they're gonna eat you alive. So you're collecting premiums. Oh, 73% of y'all are going short, but guess what? We're gonna take the market up. Oh, 90% of y'all going long, we're going to take it down short. Why? Because y'all going to have to cover those positions. Y'all going to have to account for if we take this market low. You're going to come back down and you're either going to close out your positions in a loss, or we're going to collect your stop losses. That's psychology, the game. What you think happened here? I just told you over here on the other side. I said, if we close above this, then we can start talking about going up. But since we didn't close above, that's an issue. Don't you think that traders over here are saying the same thing? Oh, we closed above. We're going to the moon, and then good. Look at all this pressure. Now you got millions of traders coming to the market, and they're going to buy. They're buying, they're buying, they're buying. And then what do the market makers say? You know what? All their stop losses are down here. Their stop losses are down here. Stop losses are down here. So let's play with them. Let's bring it back. Boom. the advanced trader says, oh, it's just a retest. Because we're taught if it breaks support resistance, the resistance becomes the new support. So then you come back down, you test the support, and then we're gonna go ride it up. Well, it does do that. It breaks a little bit, but then it comes back above. And so the retest trader or the conservative trader is saying, see, I'm smart, I'm right. And then the aggressive trader there who took the breakout, they're saying to themselves, yeah, I'm smart. I'm sorry. Oh, it's pulling back. I'm just gonna double up on my position because I know it's come back to retest, or they just take profit. They come back, they load up here, boom. Everybody's smart. Everybody eating. They're eating. They're eating. But then they start getting a little too comfortable. For some reason, they know that it's gonna go higher, and then that's when the market starts coming down, and that's shaking them out, taking them out, taking them out, taking them out, playing with them, teasing them. All right, all this teasing, all this teasing, all this teasing, and look how it's just inching lower and lower. It's playing with you. We're going long, we're going long. Nope, got y'all. We're going long, we're going. Nope, got you. I told you, we are in a new ball game. It's just not going to be this thing where you just think it's going to do this. No. You're going to go through a lot of waves, a lot of movement. This is a different asset class. It's totally different now. You can't treat it like a stock. You can't just treat it like gold. You can't treat it like it's a combination of all of them clumped together. So if it's a combination of all of them clumped together, you're gonna have to be very smart in how you trade this. Me personally, I suggest a certain loading zone or a scale-in process, meaning that as long as Bitcoin is below $14,000, you're just buying every 2 weeks. Just simple as that. You don't care what it's doing. It doesn't matter because you're looking at the long term. You're looking at 2, 3, 5 years down the road. Who cares? With all this up and down, all that, no, too much emotions is in it. But you got greedy traders who are trying to trade all this. All right, so you got, like I told you, got the futures markets, you got the forex, you got derivatives, you got all those things that are now in play for these cryptocurrencies. So that's why you're getting all these swings. It's because somebody has to make money. All right, look at this. It's back up here. What you thought happened? Everybody started going long, and they tore them up, ate them up, all kind of blown accounts, just nasty. And then what happens? What happens? what you think? What you think happened? Everybody thinking it was gonna go short, and then when everybody started going short, what did they do? They reversed it on you. What you think is about to happen right now? Everybody coming in the market, they think it's gonna go up. You better be careful because why? All this is psychology. To make it simple, look at the masses do the opposite. That's it. It ain't really nothing about no bulls versus the bears. It's the retailers versus the institutional investors. That's it. And they want to win all the time. But in order for them to win, they have to collect. They have to collect from the losers. So they need majority of the people to be on one side. I mean, think about it. Anything. If you had to pay out something, and it was a zero-sum game, you got to have more losers than you do winners. Because if you had the same equal amount of winners, nobody makes no money, and whoever sets the market got to come out of pocket to pay all the winners. You know, think about it. If you won the lottery, think of if 100 people played the lottery and it was for 100 million. No, I'm sorry, $1 million. 100 people won the lottery, and it was for $1 million, and only 100 people played, but all 100 won. Well, how you gonna pay the million? Not enough people put into the pot. Only 100 people. So you only so if they won, and if you had to pay something, everybody just get $1. Because if everybody put in $1, get it, Everybody put $1 in. That's only $100 into the pot. So if all 100 won, yeah, you thought you was about to get in for the million, but you didn't have enough volume. You didn't have enough people to put in. So therefore, everybody just get $1. That's how it works. But what you do is you have to have millions of people putting in $1. So if a million people put in $1 and then only 100 win, that's where the money at. Why? Because the 999,000 people lost, and they paid the 100 that won. You get what I'm saying? So that's how the game is played. These red and green bars, man, you can call it the Bulls and the Bears all you want, man. That's retail versus institution. And the way it's designed, every bar on here is just really the institution. You're just being taken out all over the place. So your job is to get smart and think like the institutional traders. This is obvious. This is obvious. This is obvious that there's a lot of buying pressure that we look like we want to break this. A lot of people are jumping in to go long, but then down they getting, let's shake them. Let's shake them. We see these wicks, these spikes down and stuff. What do you think it's done for? You think it's somebody accidentally hit a button to do a massive sale? No. They look on the chart. They're like, oh, that's $5 billion worth of premium sitting down there. Go get that. Because when we go up to the top side, we got to pay out. We got to pay the winners. But let's knock out some of these little people who think it's going short. Who it's going long. Once they do that, boom, it set the market. That's the reason why they call it market maker. They got to make the market. All right. So that's my analysis on this Bitcoin stuff. You know what I'm saying? That's where we at. Let me look at I love Cardano, if you know that. So look at Cardano. And it's possibly going to be the same too. All right, we're on the daily chart. Here we go again. We got a key level was broken, but sure didn't stay up there. See how we done dip back below? Okay. All right, look what we got. It broke this level, so we did break a key level. This was a key level right here of resistance. I don't even know what I had this line up here for, but let's just focus on this key level. It did break. Then it came back and retest. Remember we talked about that retest? All right, we got a retest. And then now you got to watch your conservative traders done jumped in. Then they back up again. You know, they may be short-term trading some of you in the derivatives market or whatever. Then you had a break below back here. But remember what I told you? Those wicks leave clues, right? That's a clue. Look at this. This thing pierced back. It's a clue. I would not be surprised if this starts to come back. We get candles coming down to cover this wick. We got a what? We got wicks right here too. That can be covered. Why? Well, look at this. These wicks that left a clue, and then it consolidated, and eventually moved up, and then this candle right here engulfed, and it filled that wick. It covered it. Boom. All right. Wick. Down. Boom. Covered it. This is good too. This lets us know that price will come back up here eventually and cover it. But for right now, that is not the whole facts. That's just the story. The story says we're going here, but not yet. Because we have what? Clues. Clues to steal. And this is the granddaddy of them all. This wick still can be covered, which means we can come back down to this area. I pray and I hope it does. Because if you understand investing, you want the market to stay down as long as possible so you can accumulate all your little I ain't gonna call them little, but all your stimulus checks and all these other perks that's coming in. If you knew what I knew, me, on my opinion, I am buying up ADA, Cardano. I'm buying it on up, all right? Because we need to build a position to where we will never, ever, 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 ever buy these coins that's out right now ever again. You hear that? We should be in a position that we should buy. We would never, ever, ever buy again. Because think about the person who bought Bitcoin when it was 1 cent and they had the same mentality. I'm going to load up to where I would never, ever, ever have to buy ever again. And that they could just scale out over time. Just massive positions and killing it. The same mentality that you should have as well, too. Because if you take that mentality, right, I always told y'all to do the ×2 trading investing method. If Cardano was at 7 cents, times it ×2, that means 14 cents. That means you're going to buy as much as possible as long as it's below 14 cents. As soon as it passes 14 cents, that's it. You don't ever buy ever again. That's just my opinion. If you take it, it's not financial advice. All right. Let's look at XRP. All right. XRP. XRP is a little bit, this is unique because it is, but it's not. It has a similar channel. Look, remember what we're doing. You can tell me what's this. This is what? This is a what? Fake out. Why? Everybody think it's going long. Let's take the shorts out. Let's take the longs out. All right. When we take the longs out, then everybody say, "Oh, we're going short." All right. Let's take the shorts out. So let's take it back up. This is mind games. All right. You gotta know that. Let's look at this whole entire bullish, this bearish drop. This is from February. This is where we're at. We came to the 50% retracement. We need to be careful of this right here. This looks like this could be a bear flag, which means we could go down to the downside some more, which means, look, we're still in this, we're not even really out of this channel. We still got this channel. We still got this move, all right? But what we do, some key things that we do have is that we got the 61% and 78% level that we still can reach. There's a wick right here, so therefore that is a what? That is just leaving us a clue. It will come back. It will cover that wick, but just not right now. All right. I do foresee that price can come up into the 25% in the this 30% area, but I do believe that we may consolidate back up in this area. Regardless, the key area to break for us to at least start having a decent conversation is right there at 23 cents. Until then, we don't need to be talking about anything. But look, this look like a little flag pattern. You know what I'm saying? It's forming. All right. And then we can do a Fibonacci within a Fibonacci. I call it the fibs within the fibs. All right. If we do a fibs within the fibs, we're doing just this move right here. All right. And then we can measure and we can see where price is at. I bet you it's around the 61% area. And I am 100% correct. Look at this, 61%. I told you. This is 61%. All right. What is the main move? It's this move right here. All right. If that's the move right there, then that is what? That is an impulsive. That's the impulsive bearish move. Then we got a correction. If we got a correction, then now what do we have? We have to measure that particular move. All right. We measure the move down. Boom. Here. Boom. Bring it back up. Boom. Duck. This is where we think we're going. All right. Boom. All right. Price may come back up here. Bam. Target. What is this? 15 cents. This is buying zone. I'm buying. I want price to come back down here and buy. I'm not buying anything up here. No, there's no buying. Come down in this zone. Anything in this zone or below, we're buying. We're missing car payments. We're missing house payments. We're doing anything to buy in this zone. We almost near maxing out credit cards to buy in this zone if that's the case. But that's what we're doing. All right. So you clearly seeing how I can move fast throughout these charts, and I can plot and say, look, this buying zone. I'm not sitting here looking at no charts all day. I'm just doing this analysis, with you guys. So what I'm saying, so you can see. So those what we did Ripple and Bitcoin and Cardano. You know what I'm saying? Like, let me show you. You know what I'm saying, how it looks. This is a regular. You know what I'm saying? This is a regular forex pair. But you see how I drew this green zone, right? If you look, what I made money today off of the same type of draws, but this is on a lower time frame. This is on a 1 hour. Like I day traded this. I day trade forex. I don't day trade cryptos. I day trade this. You see this? You see this green zone down here? What I told you. I said I have zones where I buy. And what did I do right here? I bought the US dollar versus Canadian dollar, and then I set my zone up here and look at the money that was made. Oh, come on, y'all. Man, on this channel, I'm not gonna brag about how much money you can make, whatever, man. Show me the chart. That's what we're gonna do. That's what I'm gonna start training you guys on to do. Be on the lookout. I'm gonna have a course. It's gonna be nice, sweet, and short. You know what I'm saying? It ain't gonna be nothing. It ain't gonna break your pockets or nothing. But I'm gonna show you how to chart. You chart, you set up, you get your green zones, show you how to use the tools. You do all those things, man. That's the skill you're gonna gain. Nobody don't care about people showing how much money they made. Well, I can show you how to make $25 or $25 a minute, or $500 a week, or I can show you how to turn your phone to an ATM machine. I don't care about all that. Show me the chart. You see it. Nobody don't really be posting their charts, right? Post your chart so we can see your vision, and then we want to see if your vision played out. Your chart is your trade plan. I can show you a phone. I can show you all that. That's crazy. Who cares about your bank statement? That ain't my bank statement. If I show you my bank statement, what are it going to do for you? Nothing. But I can show you how to chart. If you know how to chart, man, you can do so much. You can do so much. Because trading all comes down to psychology. It don't have nothing to do with no strategies. I can show you the strategy of how to chart. And if it's married with proper psychology, then there's a possibility that you could be profitable. You heard what I said possibility. Because nothing's guaranteed in trading. You can have a perfect strategy and be in the wrong market at the wrong time. Maybe the market is not conducive for your strategy. What if we go through a major economic shift? Some of your strategies may work, some of them may not. It depends. I don't know. But you just saw, if you don't understand how the institutions work, you got to play the opposite, man. You got to think like an institutional trader. You got to act like an institutional trader. You got to act like you got some sense. All right? People who lose a lot, they act like they don't have no sense. So that's what I'm going to help you guys with. I'm going to help you guys. You're going to develop a trade plan that's going to be like a business plan. You got to know why you're doing what you're doing. All right? And then you're going to marry it with the proper psychology and then the proper strategies. And then boom, there you go. You position yourself to be much better. I really want to see you guys succeed. All right? We got a lot going on in this world, but a lot of times a lot was going on. It's because we lack the financial aptitude, the economic empowerment piece. We don't have enough money to come to the table. So if we get the money to come to the table, a lot of these injustices that are happening in the world, it won't even be happening. It's because we have the economic resources and the power to make things move. It's hard, I hate to say it, but it's almost like if you don't have money in this society, it's like you're worthless. You don't mean anything. Well, guess what? What if enough of us had enough money that when somebody that either looks like us or somebody who's been treated wrong, whether they look like us or not, that we have enough money, we have enough say so that we can act on their behalf and we can speak up for their behalf. It was like, you know what, I'm a body lawyer for them. Oh no. I'm gonna go speak to uh the owner of this particular franchise because we in the same business chamber of commerce. We I know I play golf with this person, or wait a minute, I know the owner of that basketball team. His son plays basketball or football with my son. I'm going to have a nice little candid conversation and like, hey, we need to do something about that. Why? Is because I can come to the table because I have something that I can put on the table. Get your coins right. Get your money right. But before you get your money right, you better get your mind right. Get your mind right. Get your plan right. Trade your plan. All right? Plan your trade. Trade your plan. Treat your mind right. We in this together. I'm going to help y'all. All right? So this was my nice little analysis. We did Bitcoin, Cardano, and Ripple, and I just showed you a trade I took earlier today. With this was the markup. So these actual bars wasn't actually here. All right, price came. I might have to stretch it out more, but price came what? It came down to my green. I had my green zones. All right, you see this? You see this? See this right here? This big red candle. All right, when price in fact, this green candle. All right, it was it was it was actually bearish at first. All right, it was bearish, and it came into my zones. All right, and then it came back up. So when it crossed back over into these zones, this is where I bought. All right, so boom, bought, target, bam. All right, so I enjoyed this. I hope you guys enjoyed this content. I'm sorry that I didn't put out a lot in the last week or two. I've been ripping and running. It's the end of the school year. If you guys know, I work with a nonprofit organization called Communities and Schools of Atlanta. So we've been closing out, helping families. It's a lot of families out here to struggle. If you want to donate to Communities and Schools of Atlanta, please do. You can go to communitiesandschools.atlanta.org. We do a lot of charity work. We help families in getting keep their lights on, helping paying you their rent, helping homeless families, a big, huge homeless population here in Atlanta. We keep these kids and families off the street. We put them in temporary housing, extended stays in hotels. We had a few family members of students who died from the COVID-19. We've paid for funeral expenses. So we do a lot of things, and I love to give back. So that's one thing I love about working with Communities and Schools of Atlanta. But if anything, if you got charities in your area, like reach out, like do things. You know what I'm saying? We gotta learn how to use our money for positive things as well, guys. So all right, y'all have a great day, and I hope y'all enjoyed the content. Make sure you hit the like button and subscribe. All right, y'all have a good one now. Thank you.